I'm Charles Guinn, and I'm a certified aging in place specialist. Today, let's answer the question, what happens when I die and I have a reverse mortgage? The home equity conversion mortgage, that we commonly call a reverse mortgage, has only one payment during the life of the loan, and that is due when the borrower no longer lives in the home. Often, that's when the homeowner dies, or if a couple, when the last surviving spouse dies. Both the principal and accrued interest are collected at that time. You may know that a reverse mortgage is like any other mortgage in that the title to the home stays in the homeowner's name. The bank has a trust deed for security, just as with other mortgage loans. So upon the death of the homeowner, the title to the home would pass to their heirs. Of course, the loan is attached to the property, and at that time the loan would become due. The heirs have the choice of what to do with the home. They may sell and keep the proceeds, or pay off the loan from savings, inheritance, or by refinancing and keeping the property. Normally, the property is more valuable than the amount of the loan, and often the heirs wish to sell the property and have the cash. The government agency that regulates reverse mortgages, the Department of Housing and Urban Development, or HUD, realized that to pay off the loan immediately might force the heirs to sell the home quickly and lose money. So they allowed the heirs more time to settle the debt. The heirs have up to 1 year with HUD approval to finally settle the payoff while they attempt to sell the property and get a fair price. There are times when the real estate market has downturns and home values decline significantly. This is when the property may be financially underwater, where the loan balance is greater than the property value. We've seen this for both traditional mortgages and reverse mortgages during the 2007 housing crisis. The graph here shows the national averages. Some areas went down even more. But here too, the heirs have choices. The first thing to know is that a reverse mortgage is a non-recourse loan. That means the home stands alone for the debt. Therefore, heirs will never be forced to pay if the home is financially underwater. The heirs still have two choices even in this situation. Of course, they can just turn the property over to the bank and walk away. But what if there was something special about the home and they wanted to keep it? Here again, HUD realized that this may be the case for some families, and they made a special provision for that. There's a rule that allows heirs to satisfy the loan and keep the property by paying just 95% of the current market value. To illustrate this, let's take a homeowner living in Riverside County, California. In 2006, she got a reverse mortgage to pay off her existing mortgage. At that time, her home was valued at $300,000. Then she lived comfortably without those mortgage payments for the next 5 years. In 2011, she became ill and passed away. Well, the 2007 housing crisis hit Riverside County pretty hard. The home values went down 60%. So when her kids inherited her home, it was only worth $120,000. Now, they could walk away if they wanted, but they loved the place and they were comfortable there, and they wanted to keep it. All they had to pay to satisfy the loan was $114,000. That's 95% of the current market price. They arranged financing, and with a $22,800 down payment, they were able to keep their mom's home. Reverse mortgages really can help people have a comfortable, secure place to live for the rest of their life. And if the heirs know their rights, they can have happy endings too. Just a note here, I strongly recommend for my California clients to see an attorney about a living trust and other estate planning documents, so their property will easily go to their heirs exactly the way they want it to and save costly probate charges. Now, if you feel this information was useful, you may be interested in seeing my other videos on my YouTube channel or my website. Here's a partial list of titles. A reverse mortgage, when used properly, can provide you with a secure place to live for the rest of your life. All you have to do is keep up the taxes, insurance, and keep your home in livable condition, just as you have to do now with or without a mortgage. But just as with other financial products, if used wrong, it can be devastating. That's why I stress you should not get financial products like investments, insurance, or mortgage loans on the internet or over the phone from a salesperson on an 800 number call center. Make sure you know the qualified professional you're dealing with, where they're located, how to contact them after the loan closes, and know that they're dedicated to doing what's in your best interest. And that should include telling you not to get a reverse mortgage if it's not right for you. For more information about reverse mortgages, you may see my website, charlesguinn.com, or call me and ask your questions. I'm happy to talk with you. Thanks for watching.